Hey everyone, we're here with another video today, and today we're going to talk about how you can actually sell your business, sell your online business, how that process actually looks like. For most entrepreneurs, this is what they consider the end game, the last chapter of their entrepreneurial career, right? Because once you sell a business, you're no longer an entrepreneur because you don't have a business, right? Well, that's not totally true. Not only is selling your online business not the end of your entrepreneurial career, it can actually be the beginning of it. And not only can you get a life-changing exit when you sell your business, but you can also get the seed to immense wealth creation if you treat it correctly. So let's dive into it in this video on how you can sell your business, get that life-changing exit. And at the very end of this video, I'm going to go into my little bonus tip talking about something called the Asset Flywheel that you can use to keep going in your entrepreneurial career. So let's dive into it. Hey everyone, so Gregory Elfrink here, Director of Marketing at Empire Flippers. We're the #1 largest curated marketplace in the world when it comes to selling and buying online businesses. So in this video, as I mentioned, we're going to be covering on how do you actually go about selling your online business. So the first step, the very first thing you have to do is first know what your business is worth. Without knowing what it's worth, you can make a lot of wrong decisions, and most likely you will not get paid what the business is actually worth because you will think it's worth far less. You'll think it's worth what buyers are offering you when actually your business is worth more. So the first step is understanding how valuations work. Now, I already did a whole video on how business valuations work, at least in the online business space. So I'm not going to go too deep into that in this video. Instead, I'll link in the description below the valuation video and you can go check that out. But just for a recap on that, in case you haven't seen the video, or if you have seen the video, how valuations work, a quick formula is it's just your average 12 months of your net profit times a multiple. Now that multiple can range wildly based off the quality of your business and a few other data factors that we have to look at. But typically your multiple is going to be between 20x all the way up to 70x. Now, obviously that is a huge range of your monthly net profit there. A quick way you can see where you kind of fall in that spectrum is just using our valuation tool. This is a free tool. I'll link it in the description. My editor will put a little CTA here that will hypnotize you to go fill out that valuation tool. And that can give you a nice ballpark range. That's based off real sales data of over 700 businesses, more than 1,000 businesses actually now that we've sold on our marketplace. So it uses real sales multiples to help you out to figure out what your business is actually worth. So now that we understand that we have to go and figure out what our business is worth, and just real quick, that multiple, say you had a business making $10,000 a month, and you got a 35x multiple, that means you can sell your business for $350,000. Now, that $350,000 might seem like life-changing income for you, maybe retirement income, right? For some of you, that might not seem that much. You might think, well, that is a very nice payday, but I'm not, retiring to the beach on this, right? So it really depends on your personal situation, whether that's a lot or not. But either way, whether it is a lot or not, I'm going to share at the end of the video, like I mentioned, a little method that I've seen sellers use pretty consistently with some pretty good success, where you can take that initial $350,000 of capital and use it as seed to grow an immense war chest of wealth. So now that we know how a valuation works and we have a basic understanding of what our business might be worth, the next step is to ask ourselves, how do we want to go about selling this business? And there's really two ways to do it. There's a lot of different ways to do it, but they basically all fall down to the same two categories. And that's either going the private route or using a broker like us. And that's what we do. So going the private route, and by the way, both of these are extremely valid strategies. I have friends who have done both very successfully, and I have friends who have done both not so successfully. So it can definitely be, some people are biased one way or another, but to be honest, they're both pretty good. But they're good at different things. So let's dive into the differences between private and going with a broker like us. So private sales, all this means is that you do not have an entity like us that is the middle entity that's helping you facilitate the deal and smooth out the transaction. You're all on your own. So you have to go and find buyers. You have to qualify those buyers. You have to make sure you have a good understanding of what your business is worth so you can differentiate between a lowball offer and a really good offer, right? You need to know all these things before you go private. And you need to know how to generate the traction to actually get people to look at your business. Furthermore, you're going to have to negotiate everything on your own. For some people, that would be fine. For other people, it's like, man, I really don't want to talk to people, and that might be a real struggle for you. And the next thing you have to do once you do accept an offer, you have to find a way to actually take that money and put it with a third party while you do what is called a migration process. So migrating is where you actually transfer the asset, the online business, over to the person that just bought it. For some people, this is quite easy. For other people, this can be quite difficult and complex. As far as I know, we are the only broker that actually helps you with migrations, which I'll get into when I go into the broker section. But just know that if you're not technical, you probably need to talk to someone before you actually do a private deal. Also, you should definitely probably not use escrow.com. Now you could use escrow.com, but for a bigger business, I highly recommend the third party that holds the money is a lawyer that is acting as escrow for you in case something goes wrong. You're probably going to be a lot more protected in that situation. So some of the pros of going private, despite all of that work I just mentioned, is you don't pay a commission. Brokers like us, we get paid when we sell your business. So you're going to be taking a cut on the sales price because that is how brokers get paid, right? When you go private, you don't have to worry about any of that. You just get the money. Whatever the money is, other than what you pay in taxes, is yours to keep. So there's all that good stuff. But private is only really good if you have an audience already, because building an audience to sell a business can be quite difficult. And especially building one that attracts qualified buyers can be even more difficult. Now, of course, you're not a broker, so you don't need a ton of buyers. You just need that one, right? Unless you have multiple businesses. But it is still a lot of work. And just before you do it, especially if you're a first-time seller, I highly recommend that you find someone that has done it before, and maybe you pay them a little consulting fee or something like that, just so you understand how the process works before you get any in depth on it. So you want to make sure you're protected and you want to make sure you're making good decisions. So the best way to do that is find a few trusted peers who operate a similar business or business model as you, who have sold a business privately, so they can kind of give you the download on how it works. So now the next way you can do it is through a broker, and that is what we recommend. And obviously we're extremely biased because we are a broker, right? This is how we make our money, is by getting you to sell your business with us. But there's a lot of good benefits of selling with us. For one, you will almost always get a better deal going with a broker than you will with a private deal. Because with private deals, the person buying the business, they're specifically wanting an off-market deal because they want to pay less. They're hoping to find an entrepreneur who doesn't know what the value of their business is, so they can get a lower offer. Now, not everyone is like this. Some private buyers are pretty smart and they'll offer you the same amount of money, maybe slightly less than what the broker will give, because that way they know that they will definitely get the deal. But most buyers are not this way. They're thinking about, how can I find an entrepreneur that doesn't know what their business is worth so I can get an awesome deal on buying this business, and they're so happy with the money I pay them, right? And again, it's nothing nefarious or anything like that. It's just an investor being smart with their money. How can I get more for the same cost or less, right? So that's one of the big benefits of using a broker. We know what your business is actually worth and what it will sell in the open marketplace, and we have the brand and the commitment to make sure you actually do sell for that price or pretty close to it. So you tend to, even with our commission taken into account, you tend to make more money when you go with a broker. That's one of the biggest benefits. The other big benefits of going with a broker, and again, like I said, we're pretty biased on this, but I like to think that we don't just say you should go with a broker because we want to make more money. We actually say this because we honestly believe it's a better route for most people. Not for everyone, but for most people it is a better route. And if you're a first-time seller, all the different things we do for you, from vetting, building your profit and loss statement, marketing your business for sale, actually negotiating on your behalf, and actually migrating the business over for you, all of that stuff is free to you until you sell the business. So you don't spend anything and you get to leverage all of that. As a first-time seller, I would highly recommend you use a broker, because that's how you're going to learn the most. You're going to get actual professional experience or professional wisdom and coaching from people who are in the trenches day in and day out, which brokers are much more in the trenches than, say, a private seller that you ask for some consulting, because most people have only sold a few businesses at most. Even prolific sellers, most of them haven't sold, say, like 10 or 20 businesses. And just last quarter, we sold over 90 of them, right? So we sold more businesses than there are business days in a 3-month period. So we know what we're talking about with this. Our ear is on the pulse, or whatever that line is. You know what I mean. So anyhow, let's go into a little bit on how the process actually works, of how you can leverage a broker to be one of your core members of your wealth building team. So for the rest of this video, I am basically going to just assume you decided to go with a broker. So if you're wondering why this sounds very like I'm using a broker, that's the reason why. I'm describing what the process of selling your online business would be like if you decided to go with us. Now, there are some similarities with other brokers and some differences here, and I'll try to point those out as best as I can as I explain the process. Also, if you're looking to sell your business privately, some of this stuff is still going to be quite useful for you to think about when you do go sell your business privately. So let's hop into it. All right, so how does the process work? It all starts with a process called vetting. Vetting is where you submit your business with us. We have an entire team dedicated to reviewing your business. This is where we're making sure the traffic is legitimate, the income is what you say, and we're doing our best to review that to make sure everything is accurate. And not only that, but packaging your business in such a way that it is attractive to investors and buyers who want to acquire these businesses. So that's what we're doing there. It is extremely important that you are brutally honest with the broker when you're in this phase, because if you're not, if you lie or exaggerate or something like that, you're just going to hurt yourself later in the process. It doesn't really serve you to do that. So it's better for you to really just be flat out honest with mistakes, with errors, all that kind of stuff that you normally wouldn't like to admit. You should definitely admit it to a broker in the vetting phase, because we can help you and coach you through that on how to approach buyers with those mistakes now known. So once you're done with vetting, you're going to get a valuation from us. And this is different than our valuation tool. Our valuation tool, while it is extremely accurate, it gives you a ballpark range of what your business is worth, versus we will give you what we think is the actual range. Now, obviously with a tool, automated tool, we can only get so far. So this vetting process is really the hands-on, down in the weeds kind of valuation, where we have really inspected your business and we know pretty closely within a margin of error of what your business is going to sell when it comes out to our marketplace. So if you accept that valuation, it gets listed onto the marketplace. We start marketing your listing, we start promoting it, getting those qualified buyers looking at it, and we also start engaging those buyers on your behalf without you really needing to speak to them. They will come to us and they'll ask a bunch of questions, we'll answer them. Most of these are questions you yourself have answered for us in the vetting process. And our sales team uses that, so we're not always bothering you, so you can pretty much focus on running your business instead of having to sell it, because you have us to sell it, right? And when we get a good buyer that looks like that they're going to be a good fit, they want to talk to you, we move into what is called a buyer-seller conference call. Now, if your business is a smaller business, say like $100,000 or less, sometimes this buyer-seller conference call is exactly the same, just minus the call part. Sometimes it's just done via email on smaller businesses, but as you get bigger businesses, it will traditionally be an actual phone call. And what this phone call is, it allows the buyer to ask you more intimate questions that we didn't put on the listing page for, to protect your assets and protect your private information, all that stuff. But this buyer is now ready to know that kind of stuff to make the last bit of their due diligence, to check off their due diligence list to see if they're ready to make an offer or not. Typically, an offer won't happen on these calls. Sometimes they do, but it is not super common. Usually the offer happens after the call. The nice thing about when you get to this phase in your business is you can feel a little bit more confident, for one, because if there's one person willing to do a buyer-seller conference call with you, that usually means there's a lot of other buyers circling around on your business listing and looking at that business, getting closer to making a buying decision themselves. Now, this is kind of unique in our marketplace in the sense. Most other brokers, when you go to them and do a business, or to sell your business, what they'll do is called a letter of intent. And a letter of intent basically means a buyer says, I have the intent of buying this business. And so the broker says, okay, they take that business off of their marketplace so no other buyers can really look at it. And then you start the negotiation process. We don't actually do that at the EF marketplace. What we do, like now and again, we'll do exclusive due diligence, but it's very rare. It's not like the normal process. The normal process is buyers are always looking at your business until it's basically sold. In pending sold, we might take it down, but otherwise, yeah, people are always looking at your business. So even if you're having a buyer-seller conference call, that doesn't mean there aren't maybe a dozen or 2 dozen other investors and buyers also looking at your business at the same time. So that's a really good sign that you have a buyer-seller conference call. That usually means you're getting very close to actually selling the business. So after that call, that is usually when you get the offer, as I mentioned, and you have a few different things you can do at this point. One, you can accept the offer to say, yes, this is great. I love this offer. I will take it, sold. Let's get going. Or you can do a counter offer. If maybe it's too low for you and you want it to come up a little bit higher, or maybe you don't like the terms and you want the terms to be changed. So this is the time where you can make that counter offer. And throughout this whole process, our sales team, who has been working with that buyer as well as you, they can tell you what they think the buyer would or would not accept, because they tend to have a little bit more of the backstory on the buyer. So they can coach you through this, like what you should do, and they'll help protect you from just accepting a low ball offer if we think it is actually a low ball. We want you to succeed as much as possible when it comes to actually selling your business for the best possible price, right? So we will give you a good coaching on this and give you advice on what to do based off what we know about the buyer, as well as other buyers that are looking at the business. So after you accept the offer, or don't, but let's pretend you did accept the offer to move on to the next one, you will go into the migration process. Now, I mentioned that we are quite unique in this. Personally, I think every reputable broker should do this, but most do not do it because they're afraid of liability issues, and that's migrating a business. So again, migration, all that means is taking your business after it's sold and giving it to the new owner that just bought the business. This can be quite complex depending on the kind of business you have, or it can be quite simple depending on the business you have. Either way, we help you migrate that business. We have an entire department dedicated to migrating your business, and we're the only ones that really do it in the entire industry. Now, I think there is a couple other people now who do migration, but they're going to charge you an extra fee typically, and it's just a little bit more of a hassle. We do it for free when you sell your business with us. So that is probably the most important part, by the way. Like, everything that leads up to the migration is the most important part, because if you don't successfully migrate the business, then you don't successfully sell the business. So this is like the most important part at the very end. And if you're not technical, it is one of the most annoying parts too, sorry. Unfortunately, there's not much we can do to make it less annoying other than having our team there to handle all the technical difficulties on your behalf. So once your business is migrated over, there's one last thing, and this is again something unique that we do on the Empire Flippers marketplace. Sellers often don't actually like it, but I think sellers should love the fact that we do this, and that is what is called our 2-week inspection period. So a 2-week inspection period, all that means is once the business is successfully handed over to the owner, the new owner, the person who bought it, they get 2 weeks to review what the earnings are on that business. And what they're looking for is if revenue has dropped by 50%. The business during that 2-week period cannot drop underneath that 50% revenue mark, using the previous earnings as kind of like the basis for what it should be earning during that 2-week period. If it does, we do what is called a reversal, where we hand you the business back and we hand the money back to the buyer. Now, the reason why we do this is because we want to make sure our buyers are just as successful as you are. So that means making sure to the best of our ability that we don't sell them what is called a lemon, business that just totally turns into a dumpster fire or something like that. We want to help them avoid that and hopefully give them an investment that can be potentially a positive life-changing experience instead of a negative life-changing experience, right? So we want to help them out with that, and that is the final buyer protection we really have. The reason why you should love that as a seller is because we do this. This means buyers are a lot more comfortable using our marketplace. They know that we're out there to help them, and if something goes wrong, even at the the 9th inning of the game of buying a business, we're there to help them and protect them. And because we're like that, we have more buyers on our marketplace than pretty much anywhere else. We have one of the largest databases of investors for digital assets that is in the world, to be honest. So because of that, you should love that, because a lot more buyers are going to be looking at your business. And if you have a quality business, a 2-week inspection period is not going to do much in terms of what you get. It's just not. If you have a shaky business and you're afraid that the 2-week inspection period will catch you out where you don't get paid, then there's a good chance you probably wouldn't have made it on our marketplace anyways, because we reject most businesses that get submitted to our vetting team. Anyways, this is not a scary thing for you as a seller. It's just kind of like a hurry up and wait thing. After the 2 weeks is over, the buyer says, yes, everything looks good. Go ahead and wire them the money, and we pay you the money minus our commission. And like I said at the beginning, typically the money we send you, even minus our commission, will be more than if you had gone the private route. So that is like the whole process of selling an online business. That's exactly what it looks like. And like I mentioned, there's a lot of crossover, whether you go private or use a different broker than us, a lot of it's pretty similar. So if you are going private, I'd rewatch this video, take notes on this, and try to copy that process to the best of your ability. Or if you don't want to do all that work, you can just use us. I'll put a link in the description below if you do decide to sell your business with us. So let's get into the bonus of this, what I talked about, the end game of entrepreneurship. Like I mentioned, a lot of entrepreneurs, they think selling their business is the end. Like nothing else is there. I've accomplished everything in this game. But that is not true. When you sell a business, say it was that $350,000 business example earlier, that is probably the largest capital windfall you've ever had in your life, or pretty close to it, if not. And it is probably the moment in your life where you are like the most liquid, you have the most money in your bank account right now. And those two things combined put you in a very powerful position because you get to be that liquid very, very quickly when you sell a business, right? You get it all at once. So what I see sellers do to grow their wealth dramatically, and this is why I say selling your business is actually the ending of chapter 1 in your entrepreneurial career for a lot of people, is they take that money and use that as a seed accelerator into what I call the asset flywheel. Basically, they'll take that $350,000 and they'll bend it to the purpose of either building more businesses using the standard operating procedures that they built for the business they just sold, or they will go and buy other businesses. Now, buying other businesses is actually the fastest way to do what I'm about to tell you, because it's a lot easier to go from $5,000 to $10,000 a month typically than it is to go from $0 to $1,000 per month. And when you buy a business, it's already making money, it's already proven, you get to jump ahead of the timeline. So sellers that really go hard at this, they tend to buy versus sell, tend to buy instead of build a new one from scratch. But honestly, either way works. Whatever you're comfortable with, you can achieve the same thing either way. So let's back up a little bit here at the 30,000 foot view of what the asset flywheel is. So the asset flywheel, it kind of turns itself on the head of what we typically think about with a business. So most people, they look at their business as an ends to a means. Usually that means is money, right? When they sell that business, they got the end, right? They got the final bit of what they were looking for. But with the asset flywheel, instead what you do is you look at your asset's only purpose is not to make you money necessarily. The only purpose of the asset of the business is to help you build and buy more assets that you can sell again. And the only point of those assets is to, again, help you build or buy more assets. So you basically save all the capital and hopefully most of your monthly profit as well from your business. And you just aggressively save that money. You sell the business, then you buy 2 more businesses, you build them up using your SOPs because usually there's low hanging fruit. At the end of year 2, you can sell one of those businesses off. Then you use that money to maybe go buy another 1 or 2 businesses and growing that other one. Year 3, maybe you sell off all three of the businesses, or maybe just 2 of the businesses, and you keep building up one. Over a period of about 4 or 5 years, if you keep doing this cycle where you're just aggressively saving money and you're redeploying the capital into your asset flywheel, what is going to happen, and the beauty of the strategy, is the flywheel will start moving faster and faster. The first time you sell a business, maybe you can only buy 2 smaller businesses. But the second time, maybe you can buy 3. And the third time, now you're probably going to be able to buy 4 or 5 of these new businesses and still have capital to spare to throw it back into your asset flywheel to make it spin ever faster, and the wealth becomes pretty staggering in a fairly short period of time. Now, I'm not saying there isn't failure involved with that, nor am I saying that is easy. There is a lot of failure and heartache that goes into this. But if you do it even 60-70% successful, you're going to be pretty happy with the results usually. And that's because the earnings from an online business, a digital asset, tends to outpace earnings in other markets. It is more volatile, but as long as you treat it with some caution and with some real determination, the asset flywheel, when it comes to digital assets specifically, can be a total game changer. And when you sell your business, that is really the start of you being able to start speeding up that flywheel and generating that wealth. So there you have it. That's how you sell a business, and that's how selling a business can actually be the start of your entrepreneurial career if you treat that capital wisely. Obviously, if you want to sell your business with us, you can go and click the link in the description. If you just want a free valuation, that link will also be there. Make sure you subscribe to this video if you did enjoy it. I would love it if you did, so make sure you hit the subscribe bell. We're trying to produce videos every single week about either buying an online business, selling an online business, general marketing advice, or general business advice that can help you, whether you decide to sell with us, go privately, go with a different broker, or not sell at all. You just want to build a bigger and better and cleaner business. We're happy to help you no matter which way that is. So please subscribe if you do enjoy this video, and you'll get notified when more videos come out. Now, back to you. I would love to know it in the comments down below, what you thought of this video. Are you planning on selling your business? Tell me why or why not. And if you are selling your business, what do you think about the Asset Flywheel? Is that something that intrigues you? I will probably be doing another video. In fact, I know I'm doing another video just about the Asset Flywheel concept, because I gave that speech in Sydney a few months ago, and people seem to really love it, love the concept. So I'm going to be going through a deeper dive of that concept in another video. So if you haven't subscribed yet, here's the third CTA for you to go ahead and subscribe to our YouTube channel. But please leave a comment down below what you plan on doing, whether you're going to sell your business, why or why not, and if you're going to use something like the Asset Flywheel. Love to see the responses, and hopefully I get to respond to some of your questions and comments as well. So that's it, guys. I hope you enjoyed this video, and talk to you soon.